Hi there, Aaron Dunn here from Smarter SMSF. In this video, we're going to show you our TRIS to retirement phase documents where a member currently being paid a transition to retirement income stream satisfies one of the conditions of release set out within the Income Tax Assessment Act, where that TRIS automatically moves into retirement phase, or they notify the trustees to move that benefit into the retirement phase. You'll see here we have the documentation that is printed in addition to a sample document. And if you want to find out more, you can visit our TRIS to retirement phase. But let's go in and look at the order. As is the case with all of the documents inside Simple Fund 360, you can simply navigate from the list of your clients and it will then populate much of the information required in this form. The only tip that we have, you can see here, the fund address populates, but if you want it to populate for things like the trustee meeting, all we suggest you do is go to the end of the address, click space, it will bring up the address through the Addressify plugin that we have, and then as you work your way down here, you will see it is now visible here for you to select as the trustee meeting address. We have our two directors, John and Jane Smith. We can nominate John as our chairman, select our particular meeting date, and then it's a matter of just going in and choosing the TRIS member, which in this instance we'll assume is John. And again, we can use that drop menu if we want to for the address. Otherwise, we have that populated, as you can see in the member address as well. Simply going to click next and move into the next screen here. And now you can see we're getting to the very specifics of the TRIS detail. So again, we have tool tips here that outline the specific section within the Income Tax Assessment Act. So you can click on that section if you want to go and read a little bit more about that. Otherwise, you can simply just go to the drop menu here. And for example, if you click age 65, you will see here again the important note that this automatically determines the value on that member's 65th birthday, as opposed to the other requirements if we have, say, for example, satisfying the retirement condition. In this instance, you can now see that it's the written notice date. And again, we're following the guidance set out within section 3780 subsection B there. So we'll just assume for this purpose that the member has attained age 65. We are looking in this instance at the date of their birthday, which we'll just put in a date here, say of 2020. And we're including the current value of that TRIS at that particular point in time. So again, we'll just include a specific figure there. All we then need to do, simply review the information that we have on file here, and then we can submit that order. So if you have a subscription, you'll see here that it allows you to simply click order now. If you're buying this document on a pay-as-you-go basis, you would simply pay the fee of $99 and a credit card would be required to be submitted at that point in time. So I'm just going to click order now. You'll see that that is starting to order, and then in just a minute or so, we will get that completed orders document, and I'll show you the generated order form that comes with it. So you can see here the confirmation that comes through, and then it goes through to the completed orders, and we'll just wait for that document to be generated. So we've now got our completed order here, which is available in the completed orders area, and you will also receive an email in respect to this order that has been delivered. So we're going to download our document here, and as you will recall from the order form, we chose the requirement that the member has attained age 65. So in this instance, this is an automatic event, which is different to a context of, say, retirement, where there's a notification that also follows that particular decision. So we can see here, again, that information around the attainment at age 65. We have a value that needed to be reported, the T-bar reporting requirements, the fact that we are moving this into the retirement phase, and the series of resolutions that go behind it. We then have our notification that goes back to that specific individual and advises them again of the specifics, in particular around the conditions that the maximum pension limit of 10% naturally now falls away, and that the preservation status of that superannuation interest also moves to an unrestricted basis, again following the requirements set out not only in the superannuation laws but also within the SMSF trust deed as well. So you do need to be very conscious with your trust deed that it is not too prescriptive insofar that they may still be caught by a 10% maximum in that example. But once again, as long as your deed would ordinarily follow those requirements, you should be fine. And that's something certainly that we've got covered off in the Smarter SMSF deed. So if you do want to find out more, not only about this document, but any of the other documents we have, please feel free to get in contact with us, team@smartersmsf.com.